Okay, so let's talk about the difference between profit and cash flow. And in this episode, we're going to use our financial roadmap board that we use in our workshops. And so we use it, it helps visual learners. I won't go over the board, but this is what we use in our financial literacy and our business acumen workshops. And so we're going to start with $10,000 in the bank, and everything else we're going to start with zero. And we're going to use, you're not going to be able to tell, but the poker chips we're using are worth $1,000 each. So our first transaction is we're going to buy $10,000 worth of inventory on accounts. We put $10,000 worth of chips in inventory and $10,000 in accounts payable. So at this stage, nothing has touched our profit and loss. It's just gone into inventory and into accounts payable. And no cash has transacted because it's all been on account. So our next step is we're going to say we're going to sell $10,000 worth of sales, and again all on account. And so again, no bank transactions, so we put $10,000 to our sales and $10,000 to our accounts receivable. We're not worrying about GST at this present stage. And because we've sold $10,000 worth of stuff, we're assuming that we've got a 50% markup, 50% cost of goods sold. And so we're going to transfer $5,000 from inventory into cost of goods sold. So we've used up $5,000 worth of our inventory. So our next step is we're going to say we're going to pay $6,000 of our accounts payable. So we paid some of our suppliers $6,000. And so our cash goes down by $6,000, and also how much we owe, and the accounts payable go down by $6,000. The next step is we're going to say we've received $6,000 in accounts receivable from our customers. So our next step is we're going to pay $2,000 in salary and wages, and then $1,000 for other, just to round out the month and have a few other expenses. So now let's have a look at how our profit looks. So in sales for the month, we've got $10,000 in sales. So we're going to write 10,000 into the sales section. We've got 5,000 in cost of goods sold. That gives us a gross profit of 5,000. Now salaries, we've spent 2, and then we've got 1 in operating expenses, and so that gives us a net profit of $2,000. So we just and then have a look at our cash. We've started with 10, we finished with 7, and so we've got a change of 3,000. So there's a big difference between 2,000 and minus 3,000. So we've got a $5,000 difference between the profit. Look at cash flow going through the business. So remember, we received $6,000 from our customers, and then we also paid out $6,000 to our suppliers. And so that gives us a cash gross profit of 0. We paid out $2,000 in salaries, and we paid out $1,000 in operating expenses. And so that gives us a net cash loss of $3,000. So you can see where the difference is in the profit and cash flow in this very, very simple example. Let's just go quickly over the difference between profit and cash flow in this example again. So we can see there's a difference of $5,000, and so where the difference is in the sales and the cost of goods sold. So if you look at the sales, in the profit column, we've sold $10,000 worth of sales to our customers on account. However, only $6,000 have been paid to us. So we've got $4,000 that are still owed to us. So there's a difference in our cash flow of $4,000 there. And then in the cost of goods sold, we've accounted for $5,000 under the profit model, but under the cash flow, we've actually paid $6,000 to our suppliers. So there's a $1,000 difference there. And so that's where the $5,000 difference comes in the difference between cash flow and profit in this simple model. Anyway, that's all of it from me in this short video. I hope you got something out of it.